Hey folks, it's Vic Noble here with your weekly trade example for the week ending May the 31st of 2013. Wow, the last day of May, can you believe that? I want to talk today about integrating candle patterns with or candlestick formations with your trading patterns. Very, very effective thing to do when you learn how to do this right. And I'll just give you a little illustration here. This is on the U.S. Canadian dollar pair. Just this last few days here actually. And this is a daily chart, and you notice I have these lines on here, and they're important to me. I watch them all the time. They're places where price used to react, and I want to see if they react there again or not. And this line here at the 104 figure level, which is significant by the way, was one. If I zoom this out, look here how it stopped right at that level again back a little while ago, and it's done it now again a few days ago. In fact, if I zoom this out even more, look at this. This is December of 2011. This is June of 2012. And this is like a year later almost. This is now the end of May 2013. So you can see they really matter. In fact, an easy way to look at them is to kind of keep an eye on your weekly charts too. Good thing to do. Look at this. Look at all of that resistance, resistance. It hits it again. Boom. Comes and even like all these other levels here, watch them. I mean, there used to be a lot of resistance here and became support. So you can watch your daily channel charts. It's a top-down process, right? So we hit that 104 level, and what happens on the 4-hour chart? We get this reaction here. Is this positive or negative? It's negative. This inverted hammer or shooting star, whatever you call it, it's negative candle action. You don't have to know all the names of all these candles, really. You know, can you see that that's negative? It's negative. Not only that, you can actually see some divergence showing up here with the price going higher. It's not qualified the way we qualified at that point, and the MACD was going sharply lower. So we're kind of on the alert for that as well. But now we break it down to the 1-hour chart. So we're at a 4-hour. We go down to a 1-hour chart, and this is the time right in here. It was on the 29th of May, and what did it do? It started to head down. The 4-hour chart was already heading down. This is heading down. We're looking for patterns now. This is exactly what we teach in the recurring forex patterns course, just like this. And you know, when you just keep it simple like this, go from your top down. If there's nothing happening on the top levels, don't do anything, just wait. This became a qualified pattern number 6 right here, and this is a really nice trade sell right up in here. This is a weekly pivot, by the way. You gotta keep an eye on those things. They matter. That was a really good sell up in there for pattern 6. Nice profit on that one. Was also a 30-minute MOF trade. We teach slingshots and MOFs in the coach's corner, but that was a 30-minute MOF. Comes down, rallies up again, hits the support, rallies up again, but we're still into a pattern 6 sell situation. This was now a perfect, another good VIC trade right here. Pattern number 6 is a VIC trade, same thing, which was also a perfect 1-hour MOF at that time. Down it went again, and so on. And as it goes down, now you keep an eye on your 4-hour chart and go, okay, where can I expect there to be support? This is a place. Look at this level here. I don't know if I have it back. Yeah, look at this. Resistance, 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 all along here, right around the 103 figure area. See that? So what happens when it gets down there, though? Well, on this candle, we finally start to show some life. It's bouncing up here. You see that? We're looking for the possibility of a trade back up higher. And we go down to our 1-hour chart again. And what happens here? Well, we have our same pattern number 6 setting up again. This time there was some divergence down here on a smaller, on the 15-minute chart. Really, it's our pattern number 5 and 6 together here. But this set up another really good pattern 6 trade again. And away she went up again. So it's just a matter of like I say, keeping it really simple. Use your candlestick patterns to on the higher time frames to see if there's a trade that makes logical sense, that you recognize as a high odds pattern, and then you go ahead and you put your order in. And we have, I'm sort of putting this in a nutshell because there's a lot more to it as far as how you put your orders in and where you take your profits and all that. But I just want to give you the idea that if you watch these support resistance levels and you watch the candlestick reaction on the higher time frames, then you drill down to the smaller time frames and find a reliable high odds pattern to trade off of. Okay, so keep it simple like that. And if you want some help with it, you'll these kind of patterns, I mean, are in the recurring forex patterns course. By the way, I'm going to show you something else about this pattern right here. This down in this level here. In fact, when we were in the coach's corner yesterday, I pointed this out. This was actually our pattern number 4 setting up right here as well with a noble entry. And it was a buy right down here around the figure, 103 figure level. And what a nice move that had back up again. And these do not need a lot of risk, pip risk in them. Okay, very, very small risk in the trades, and the reward potential on them is huge. So anyway, I just wanted to point that out, and hope that makes some sense to everybody. And we'll leave it at that. You guys have a great weekend, and I'll be back at the end next week with another weekly trade example. Thanks so much.